Buying a home in Manteca, California? Stop before you make one of the biggest financial decisions of your life. You need to know the 5 biggest mistakes home buyers make in Manteca, mistakes that could cost you thousands of dollars. I see these happen all the time, and trust me, you don't want to be the next buyer making these costly errors. So let's get into it. Here's how to buy smart and avoid the most common home buying pitfalls in Manteca. Mistake number 1, not getting pre-approved first. One of the biggest mistakes home buyers make, especially first-time buyers, is starting the house hunting process before getting pre-approved for a mortgage. It's an easy mistake to make, but it can end up costing you time, money, and even the home you really want. Why pre-approval should be the first step? Many buyers assume that they can start looking at a home before talking to a lender, but that's a risky approach. In a competitive market like Manteca, homes sell quickly, and if you aren't pre-approved, you could easily lose out on another buyer who is already financially prepared. Getting pre-approved does 2 important things for you. 1, it tells you exactly how much home you can afford. Without pre-approval, you're just guessing what price range you should be looking at. Many buyers start their search only to realize later that their budget is actually higher or lower than what they thought. Pre-approval helps you narrow down the search, so you're not just wasting time looking at homes that are outside your budget or missing out on homes you actually could afford. 2, it makes you a stronger buyer. Sellers take pre-approval buyers much more seriously. Imagine you found a home you love, but you haven't been pre-approved yet. Another buyer submits an offer with a pre-approval letter attached. In most cases, the seller will choose the pre-approved buyer because they know the deal is more likely to close. If you're competing against other buyers in multiple offer situations, having a pre-approval letter could be the deciding factor in whether or not your offer is accepted. What happens when you're not pre-approved? Let's say you start looking at homes without getting pre-approved. You find a house you absolutely love and you're ready to put in an offer. But when you talk to the lender, you realize you don't qualify for as much as you thought, meaning you've been looking at homes that are outside of your budget. Your credit score needs improvement, and you might need to fix a few things before you can get the best loan terms. Interest rates have changed, affecting your monthly payment and what you can comfortably afford. Now you've wasted time looking at homes that may not even be within reach. Or worse, you found your dream home but can't move fast enough to make an offer. Meanwhile, another buyer who was pre-approved got the home instead. What's the difference between pre-qualification and pre-approval? Some buyers assume that being pre-qualified is enough, but there's a big difference between pre-qualification and pre-approval. Pre-qualification is a basic estimate of what you might qualify for based on the information you provide. It's helpful, but it's not a guarantee the lender will actually approve you for that amount. Pre-approval is a full review of your finances, including your income, credit history, debt, and assets. The lender verifies everything and gives you a letter stating how much you can borrow. This is what sellers want to see when they're considering your offer. How to get a pre-approval and what you'll need? The good news is getting pre-approved is easier than most people think, and it's one of the most important steps in the home buying process. To get pre-approved, a lender will typically ask for proof of income, your pay stubs, tax returns, W-2s, proof of employment. They're going to want your employer information, how long you've been on the job, a credit history and credit score. Your lender will pull your credit report, debt to income ratio, which is your current debt obligation compared to your income, bank statements and assets. They're going to want to see your savings account, checking account, and other financial accounts. Once they review your financials, they'll determine how much home you can afford and issue you a pre-approval letter, which you can use when submitting offers. When should you get pre-approved? If you're even thinking about buying a home in the next 6 months to a year, you should start the pre-approval process right now. And here is why. You know exactly what price range to shop in, so you're not guessing. If there are any credit issues, you'll have time to fix them before house hunting. You can lock in your mortgage rate when the timing is right. When you're ready to make an offer, you'll be able to act quickly and confidently. Don't skip this step. Getting pre-approved should always be the first step when buying a home. It saves you time, helps you avoid disappointment, and gives you the advantage in a competitive market like Manteca. Mistake number 2 is assuming all homes in Manteca are cheap. A lot of buyers, especially those moving from the Bay Area, come to Manteca thinking they're going to get a massive home for an unbelievably low price. It's true that Manteca is more affordable than the Bay Area, but that doesn't mean homes are cheap. In fact, Manteca's real estate market has changed a lot in recent years. Home prices have risen steadily and demand has increased as some buyers move inland searching for more space, better affordability, and a suburban lifestyle. So if you're expecting to find a brand new home for $400,000 or less, you might be surprised. What is the real cost of buying a home in Manteca? As of right now, the median home price is around $650,000, and that number continues to climb as the market grows. But what does this actually mean for you as a buyer? Let's break it down. New construction homes typically start in the mid $600,000s and go up from there. If you're looking for a modern, move-in ready home with updated finishes and an open floor plan, expect to pay closer to $700,000 or more, especially in newer developments. If your budget is around $500,000, your options will be more limited. You may need to consider an older home that might need some updates, a townhouse, or a smaller single-family home. New construction homes often come with additional cost. Many buyers don't realize that brand new homes can be more expensive than resale homes because of things like HOA fees in master plan communities, which can range from $50 to $200 per month. Melrose taxes, which are property taxes in some newer developments. Upgrade costs, since base models may not include features like premium flooring, countertops, or landscaping. Now let's talk about how Manteca's home prices compare to other areas. Manteca is still more affordable than the Bay Area, but prices here are higher than some other parts of the Central Valley. If you're moving from San Jose, Oakland, or San Francisco, you're probably used to home prices well over $1 million. That makes Manteca's $650,000 average home look like a deal, but only when compared to Bay Area pricing. If you're looking for a lower cost of living, Stockton and Modesto offer homes at lower price points than Manteca. However, many buyers choose Manteca because it has better schools, lower crime rates, and newer neighborhoods. Tracy and Lathrop, these neighboring cities, have similar home prices to Manteca, especially newer developments like River Islands in Lathrop, where waterfront homes start in the mid $700,000s. What does this mean for buyers? The key takeaway here is setting realistic expectations. If you're moving from the Bay Area and expecting to find a huge brand new home for rock bottom prices, you may need to adjust your budget or consider different options. Here's how to make sure you're getting the most home for your money. 1. Know your price range before you start looking. Talk to a mortgage expert like me and get pre-approved and understand exactly what you can afford. 2. Be flexible with your must-haves. If you're looking for a newer home with modern features, you may need to adjust your budget or consider neighborhoods slightly outside of Manteca. Factor in all the costs, not just the home price. Property taxes, HOA fees, and closing costs can all affect your monthly payment, so make sure you run the numbers with the lender before falling in love with the home. If you're thinking about buying a home in Manteca, having the right guidance can make all the difference. The last thing you want is to assume homes are more affordable than they really are, only to be caught off guard later in the process. My team and I work with buyers every day to help them understand their true buying power, explore loan options, and find homes that fit their budget. If you want to make sure you're getting the best home for your money without any surprises, reach out to my team and I today. We'll help you break down the numbers and go over your loan options and make sure you're set up for success before you start house hunting. And don't forget to like this video, subscribe for more home buying tips, and I'll see you in the next video.